the most sophisticated investors on the planet, the central banks and the sovereign wealth funds and the commercial banks, are draining the exchanges, COMEX, the LBMA, the ETFs, Shanghai Metals Exchange. They're experiencing record deliveries. In the case of the ETFs, it's only the authorized participants that can pull metal out. And they're using the suppression of the Western paper markets to run cover. But when you see the central banks over 15 months buy more gold than they ever have in history, and really you go back to 2017, and we see a trend of central bank acquisition using the suppression of the Western paper market to run cover for what amounts to massive, massive, massive acquisitions, draining the exchanges to the extent that not just in precious metals, London Bullion Market Association, the LBMA, saw more metal delivered off its exchange last year than ever before. We saw 90% of its zinc delivered, 75% of its aluminum delivered, and so much of its silver delivered that they put out a memo at the beginning of 2023 saying if deliveries remain the way they were in 2022, by the end of the year, there'll be virtually nothing left for us to deliver. The big money is positioning quietly ahead of the curve using the suppression of the metals markets, which are well documented. And it's tremendously frustrating to see a handful of large commercial banks suppress the paper price of gold. Just to give you an example, a week ago Friday, I haven't looked since, but a week ago Friday on COMEX, there were 95,000 September contracts still open in silver on COMEX, 95,000. Which represented 474 million ounces of silver. The thing about it is there's only 30,000 ounces, 30 million ounces of silver in roughly 30 million ounces in the registered category on COMEX. Those are the bars that are available to be delivered based upon the contract. So explain to me how you can have 30 million ounces backing 474 million ounces in paper claims if they stood for delivery. That's called rehypothecation, and it allows the exchanges to control the price based upon the derivative of it rather than the way that the exchanges were originally designed, where the commodity itself would dictate the price, not the futures market, and the ability to, with tremendous leverage, over 30 times leverage, to control the paper price. And because they have use this to their advantage, you are seeing the markets being drained by the most sophisticated investors on the planet. By the time the public wakes up and sees it's a trend, whenever that trend in motion really takes hold for whatever reason, well, the insiders will have been in for several years, base building and creating their value play. So I guess the bottom line is that if you want to be the person who succeeds in investing and isn't always chasing, then you have to spend enough time to research and understand the fundamentals, the big picture, rather than just the price action. Because I would argue price is the greatest tool of misdirection that there is. And you want to misdirect the markets, you do so with price, which blurs the fundamentals that are so very important. So to me, fundamentals are more important than price, but you have to really believe that the research that you have done and the fundamentals that you see in the end will play out the way that you think, rather than looking at a price, which is very counterintuitive to world events right now. So whether we're talking precious metals or any other investment, do your homework and don't just chase price or listen to your buddy. Whether we're talking the BRICS or the West, I think ultimately gold will have a role in pegging to a new system. We'll start with the West before I get to your question on the BRICS. Well, first, if we go back to 2019, remember I said the banks were buying gold in 2017 and 2018. They also did a lot of repatriating of their gold. The German Bundesbank, the Bank of Austria, Hungary, Turkey, Poland, the Dutch National Bank, the Czech National Bank. All of these banks not only went on a buying spree starting in 2017, but all of them repatriated their gold from the New York Fed and the Bank of England out of nowhere. In 2018, those same banks bought more gold as a group than they did in the 60 years previously combined. And 2019, those numbers doubled. And then the Bank of International Settlements reclassified gold as the world's only other tier one reserve asset. the BIS, which is the central banker's central bank, the most powerful bank in the world, who not only told us that by 2025, every country needs an operational CBDC, but they also in 2019 reclassified gold to a tier 1 level, which is extremely relevant when you realize the lengths that the central banks have gone to suppress the price and accumulate the physical. The head of the IMF, Kristalina Georgieva, the International Monetary Fund, another roughly 150 countries, came out and said central bank digital currencies that are not pegged to something, not backed by something, are just fiat. Well, about 6 months before that, the IMF, who has never been overly gold friendly, came out with a report that was entitled "Gold as an International Reserve, comma, a barbarous relic no more, question mark." So you have the IMF acknowledging gold's role as a monetary asset and not a barbarous relic. You have the head of the IMF saying CBDCs need to be pegged to something. What would that something be? Doesn't it make sense to use the only other tier 1 reserve asset? If we go back to your initial question, the other side of the pond, you're looking at the BRICS, Brazil, Russia, India, China, South Africa. They have a meeting in Johannesburg next Tuesday. The list of countries that have expressed interest in joining amounts to over 41, maybe even more. Saudi Arabia, the linchpin to the dollar hegemony, is thought to be admitted as a full member here at the meeting. There are a lot of things that are happening, but if we look at what the Russian finance minister said on multiple occasions, that this currency would be backed or pegged by a basket of commodities using gold as well, gold or platinum or whatever that basket is. I believe it will be. The only way that you can get people to trust a system that has been so badly mismanaged through inflation and and all of the things that have gone along with this currency that I think have soured people's view on it, is to peg it to something legitimate so that politicians can't do what they've always done, and that is to choose inflation over austerity or the tough decisions. So I do believe you want to give it legitimacy, you peg it to gold. Now, the question is, how much do you peg to gold and how do you show the veracity? Well, the veracity part would be the digital yuan, I believe. The 4 or 5 year beta tests that they've done, north of 40 billion in settlements, could easily be the rails by which the new BRICS currency is pledged to, showing what each country, using that blockchain technology to show what every country has pledged to the system. If you do it with transparency, you allow it to be audited third party independently, and you show what every country is pegging to the new system, you do not need to make it redeemable.